The cryptocurrency market has seen a brutal correction resulting in over $1 billion mainly from altcoin liquidations. In today's video, we are going to be discussing exactly what you should be paying attention to on the short time frame and the high time frame, the altcoin market, the total cryptocurrency market cap, the weekly candle close, the potential for a higher time frame downtrend, and exactly what needs to happen for the buyers to step back in and push the price up. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Bitcoin has broken down from its major weekly uptrend, resulting in a correction to 97,000, losing the critical 100,000 support. With this move toward the downside, we have seen over $1 billion in liquidations across Bitcoin and the altcoin market, with the altcoin market suffering a brutal correction, dropping from over $1 trillion just 2 days ago back to 860 billion. We are going to be discussing exactly what this means for both the altcoin market and for Bitcoin, discussing the high time frame levels, the implications of potential further corrections, and exactly what will need to happen for the buyers to step back in and push the market back up. We're going to be jumping into the charts in extensive detail, so before we get into it, make sure you smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. It is just my simple little blog I like to post all my charts and updates in. If you are interested in joining the VIP channel, you can find out more information by clicking the pinned comment of the free channel. You'll get access to two channels, the main VIP channel and the group chat. You can find out more information by clicking the first link. This is a 50+ month trading track record, and the second link being a 10-minute video showing you exactly what you'll get access to and showing you inside the channel itself. We have been operating for 50+ months and have over 700 members. Check it out, guys, and let's jump on in. So taking a look at the price action. First and foremost, we can see the weekly candle has literally just closed about 10 minutes ago. And the weekly candle was okay. It wasn't a great candle. It was pretty bearish. But the good thing about the weekly candle is that we were able to sustain at least within this weekly range between our weekly low, our horizontal black line, and our weekly high. We have also seen the weekly RSI being able to hold above that critical 62.09 level on the weekly just now for one more week, which could delay a further continuation downwards while we sustain above. We're going to be talking about why this level is so important in today's video, but to give you a quick, introduction to it, while we are able to remain above this level on the RSI, it doesn't matter if we drop below it during the week, but if we're able to close the weekly to the point at which the RSI closes above this level, we are going to be out of the woods in terms of potential corrections. If we are able to see a correction underneath that 62.09, it is highly likely we see extended corrections for Bitcoin toward the downside, potentially into that $86,000 to $92,000 support region. We'll come back and discuss that in today's video. We're also taking a look, as we mentioned, at the daily chart, our daily levels. We're taking a look at the short-term price action, our potential consolidation, our downtrending channel here, and the weekly uptrend that has been lost. We'll also be taking a look at the altcoin market from a shorter time frame perspective, and from a weekly perspective, as well as the total cryptocurrency market cap. There's a lot to be discussing, so we'll jump into it. Again, starting on the market data, 24-hour volume up 97%, 305 billion, very, very high here coming into the new week, particularly over a Sunday, with liquidations pushing $1 billion up 144%, with a whopping 922 million coming from longs. And if we take a look at the liquidation heat map, you can see only 197 million of the total billion-dollar liquidations, only 19% of the total liquidations actually came from Bitcoin. The rest came from the altcoin market and Ethereum. So we can see the extent of that altcoin correction here on the total 3 with a massive red candle for that daily. In fact, one of the largest daily red candles we have seen for many weeks. Moving over to the DXY. The DXY is continuing upwards. As we mentioned in yesterday's video, we have seen a very classic support resistance flip, which essentially with a horizontal level of resistance, we break the resistance, we see a retracement to retest that resistance as a level of support, and we see a continuation in the price action. If we took a measured move of the horizontal range from range low to range high and applied to the initial breakout point, that could take us up to the prior highs for DXY. If we see the price action continuing to trend, again, the direction of which the DXY is going to move is going to be heavily related to the upcoming economic news, specifically looking on the 7th of November, so 4 days, we have got NFP and unemployment rate data. And then on the 12th of November, so in 9 days, over a week, we have got our inflation data. These data sets are going to play a massive role in determining where the DXY goes, as the Federal Reserve made it very clear in the prior press conference, they are waiting to see how the upcoming data develops to make any official claims in regards to how they're going to tackle the whole problem with moving towards a future with reducing interest rates. So, for us to see the DXY move in any sort of positive direction, which will be downwards, okay, for risk assets, we need to see the DXY move down. We need to see this data come out bullish or better than anticipated. We'll talk about that more moving into it. The S&P 500, let's take a look. Not very good, guys. So again, if you have been following the channel, you would know we are looking for two things. And these two things will not only be, bullish indicators for the S&P 500, but S&P 500 is 70% correlated to the to risk assets such as Bitcoin. So if we see the S&P 500 turn bullish, it is likely we will see Bitcoin or cryptocurrency move upwards too. So we can use it as confluence for other markets as well. Remember, the S&P 500 doesn't move Bitcoin. They are both pegged or tied to the value of the US dollar. And therefore, if we look at a graph such as this, we can see how, just because they're correlated, it doesn't really describe the causation between the two movements. You can see here, they are both kind of connected or correlated by a degree of 0.7 correlation coefficient. And that is only a consequence as they are both valued against the US dollar. So when the US dollar goes up or down, we see both of these asset classes move in the same general direction to a correlation coefficient of 0.7. It is not that stocks move up and then crypto goes up as a consequence. It is the consequence of the US dollar changing in value, which moves both of these markets up or down. So that is how we're looking at that. Again, for the S&P 500 to turn bullish, two things. One, weekly high breakout. We had seen that. We ticked that off. Okay, we had a check. Correct. Awesome. But number two, we needed to see the RSI breakthrough. We did not see that. We didn't see that, and therefore, we are not bullish on the S&P 500. When the RSI is able to break through, we have a positive momentum shift, and that would be confidence or confluence we need to expect continuations. Until then, we run the risk of corrections back to that 50 EMA, potentially lower if the 50 EMA is lost. Look at the 50 EMA, guys. We haven't dropped below the 50 EMA since we had the support resistance retest of that bear market resistance. So we lose that 50 EMA, that could start a higher time frame downtrend, which we do not want to see, but it is a potential. So for us to be bullish, RSI needs to break. Let's move over to Bitcoin, guys. Before we get into it, sign up to BitGet, BitUnix, or BingX. These are the exchange links down below. These are the exchanges I personally trade on. You'll get a lifetime discount of 15 to 45% off all your trading fees by signing up. You'll support me making the content and you'll support yourself trading. Check it out. Sign up. We'll take a few moments and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump back in. And first and foremost, we want to take a look at the weekly, because the weekly candle just closed. And the weekly candle, from an individual candle perspective, looking at the candle itself, it was bearish, right? It was a bearish engulfing candle, which simply means the closing price of the prior candle, which is the red candle, was lower than the opening price of the preceding candle. So we saw the price action essentially represent a correction, which is bearish. So we saw a bearish weekly close. Now, in terms of the overall structure of this consolidation, we are still within the confines of our weekly range, so we are not expecting directional continuations as per se yet. But we do have a leading indicator on the weekly, which we'll come back and discuss later in today's video, being that 62.09 on the RSI, which historically has acted as a directional trigger for weekly continuations in the price. And you can actually see the 62.09 did not close below, but we are now seeing the RSI drop below on the weekly. So we do know if we close this weekly candle red, it is very likely the RSI is going to be lost, and we'll talk about what that means in today's video and why that is so important and could result in extended corrections. So, you know, if I look at myself personally, again, I will say this, I have been out of the market, I have been sitting in cash, I have been completely sidelined ever since this rally over here. In fact, we made that very obvious and very public, and I continue to say I am sidelined until I'm confident to re-enter spot positions, whether it be Bitcoin or altcoins. I'm out of both. I am simply just trading, and I remain like that as I am seeing the high time frame exhaustion and our high time frame levels have been hit. And sometimes it's easy to mistake exhaustion for weakness, but if exhaustion continues to develop and the buyers are unable to absorb that exhaustion will eventually turn to weakness and result in downtrends. We are starting to see a little bit of that over here, or the initial signs of that, with that RSI breakdown and with the S&P 500 being unable to see a positive momentum shift, even with a weekly high breakout marking deviation. So we do run the risk of steeper corrections, but it is not fully confirmed yet. We need to be aware there is still potential for reversals and potential for the buyers to step back in. We're going to be taking a look at that today. But in terms of the weekly range, guys, we'll come back to the RSI later. As we've been mentioning, a weekly breakdown below the range low will result in an extended correction towards our red line, which is our daily lows. Okay, we'll talk about that in a second. And a weekly breakout of our upper black line will result in a continuation to our daily highs, which is the upper red line, and we'll talk about that just now. So let's move over to our daily ranges. Our daily range is the most important levels, essentially from a liquidity stance, okay, on the chart, from a horizontal perspective. Again, our momentum indicators, such as our RSI, can project the potential for corrections sooner than what these will confirm those corrections to be. But if we're looking for structural confirmation of directional continuations, these horizontal red lines are what we're focusing on the most. Okay, so we know already that a break of the red level at the top, the 108, will result in the price entering price discovery. And we know that price discovery has no historical orders, as it has never been at that level. And therefore, we are entering what we call a low historical resistance range. And we talked about it in yesterday's video. We also have a low historical resistance range below 88,000 towards around that $70,000, $69,000 region. Now, we can see we have that as the VRPV drops off in comparison to these consolidation ranges. You can see a massive discrepancy between horizontal volume within these consolidation ranges, as opposed to where we have these massive volatile moves in any direction where we don't have a lot of historical orders being placed or have been traded at these levels. And therefore, a loss of these daily lows or daily highs will, in both instances, result in the price entering these low historical resistance ranges. Simply a range on a horizontal scale where the volume requirements are lower than the volume requirements in a period of consolidation, meaning if the price action is unable to sustain a critical level of support, okay, which will be our sell side liquidity over here, moving into a low historical resistance range where the volume requirements of the price to move down become progressively lower, the bearish volatility would be expected to increase and we would likely see an extended correction. And that would be applicable to the upside too. If the price action breaks through, we would see bearish volatility decrease, bullish volatility increase with bullish momentum. We would see a strong reaction toward the upside. To give you an example of a horizontal consolidation on the higher time frame, now these consolidations are incredibly common. On the short term, if you're a scalp trader, you would see these almost on a daily basis, these horizontal consolidations. But on the higher time frame, they're not so common. But to show you an example, one over here, we've got our daily lows to our daily highs. When we saw a directional break of the daily high, we saw a continuation into a low historical resistance range. We can still see that low historical resistance range over here. We saw a very violent continuation followed by a steady rise in the price action. So you can see how the price entering these low historical resistance ranges can result in violent and aggressive moves in the direction of which the price breaks. So now we have defined the parameters of the price action. If we are assigning whether or not we are bullish or bearish, the simple assignments of that would be bearish below, okay, bullish above, and cautiously optimistic or neutral in between, meaning neutral is a situation of inaction, of patience and waiting, and more or less scalp trading opportunities on the short term rather than positioning yourself for any of these two scenarios while it is uncertain of which scenario will play out. Okay, if we break down, of course, expect continuations, swing short. Break up, of course, expect continuations, swing long. Until then, I am personally neutral. I am slightly leaning towards the bearish side, particularly for altcoins, of course, and I've been bearish on altcoins for a while now. But for Bitcoin, I am still cautiously optimistic because we haven't lost these supports. But with the weekly RSI potentially breaking, that is becoming weaker and weaker. We'll discuss that in a second. Let's move over to the weekly RSI now, and we'll come back to the short-term charts in a second. So the weekly RSI is a level, and you can see on this weekly over here. Let's just delete everything really quickly. Actually, let's get rid of the vortex trend indicator. Let's get rid of everything and just chuck in this weekly 62.09 level. You're thinking, well, what the hell is 62.09 have anything to do with anything? It is a random number. It doesn't mean anything, but you'd be surprised. Let's take a look at this level historically, starting back as far as, let's go 2018. And we're going to look at the downside breaks, okay? Every time we break toward the downside, I'm going to draw a vertical red line. We're going to make it nice and thick so we can see it. Every single time we break toward the downside after being above it, I'm drawing a vertical red line. You can see already that every time we see a breakdown of the 62.09 on the RSI, we eventually see a very steep an aggressive continuation toward the downside for Bitcoin. Now that correction doesn't always last in a multi-week correction. Sometimes it is only a few days, sometimes it is only a few weeks, sometimes it is months. But if we take a measurement tool and take a look at the maximal depth after the weekly close from the break of the RSI downwards, we can see multi-digit corrections, 77% in this instance. 61%. Of course, this is slightly biased because we don't know how long the price is going to go, but in general basis, this indicates the price action aggressively moves in that direction. That is 16%. Looking at this time over here, we see a correction. 48%. Looking at this time, we see a correction. 73%. Even these smaller downward chop consolidations, around 10%, 9 to 10%, even a little bit higher, 14%. Looking at this consolidation, we saw 24, 25%. Every time, you can go back, even in history, further than 2018, we see a break of 62.09. We see a multi-two-digit, right? So, 10+% correction toward the downside. Now, history doesn't repeat, but sometimes it rhymes. There will obviously be an instance in the future where we break down and we do not see a correction, but historically the pattern has existed up until now. So if we do see a break of 62.09, the potential for a correction remains intact. Now, if we do see that correction and we apply the context of that to the price action, the possibility for a move back into this range low, and we then run the risk of a steeper correction is on the cards. So it is absolutely important that the current weekly candle is able to sustain above 62.09, or we will see a correction to 88 to 92,000. Let's go back to the short term. We can see on the short term, we have some very important levels I want to take a look at. And you can see, number one, we broke down from that uptrend. We saw a correction into our next levels of support. We lost 100. We've now retested 97. Pretty big correction. Thank you for following and paying attention to that. If again, you're watching the video, you would know that upon the break of this uptrend, we were expecting corrections. Perfect. It has played out. We can now remove this trend line. It is no longer important for us. What we are watching now is going to be a level that we've just, and you can zoom in, you can see how we just literally touched this, right? We had this drawn out even before this video started. You can see just a minute chart, we've been filming now for 18 minutes. So, 18 minutes ago from where we are here, the price was what? It was sitting up at this point. You can see we came back down over here, perfectly retested this level, and we have bounced since. So you can see how important this level really is already on a horizontal scale. This is going to be a consolidation called a descending channel consolidation. Now, this is a good thing, right? This is probably our first piece of good information today. While we are in this descending channel formation, this is actually a reversal pattern. This is a potential bullish reversal pattern for Bitcoin. If we are able to sustain within this channel, okay, we are looking 4-hour closes. We need to remain in this channel for 4-hour closes. We will eventually see a directional breakout, which could take us above that high. That high being the daily high over here, perfect breakout. Bitcoin will be very bullish, the market will rise very aggressively. So we do have a pattern here, which is developing to give us hope, developing to give us a potential rally toward the upside, but it has not been confirmed. To give you an example of this channel, we can look at the 8-month consolidation, right? This is a perfect example of a descending channel formation. Just go to the daily chart, we'll bring up the descending channel drawing tool over here, apply it to the breakout points, applying it to the low side, we can see we were able to form a perfect descending channel. Of course, we had liquidity grabs toward the downside. That is perfectly fine, but the channel was able to be respected and sustained. You can see eventually saw a directional continuation. So provided we are able to sustain within this channel, there is a potential that the buyers will step back in, the price action will rally, and the price will move upwards. Looking at the total, we're coming close to the end of the video. I'll say it again, while the total market cap remains above this prior 2021 high, the potential for a next move up, potential for 120,000 Bitcoin, potential for altcoins to recover and rally and have their moment in the sun is all there. It's all on the cards. You can see the narrative we're trying to show today is that we're getting close to that breaking point, but we're not there yet. We're getting close to the point at which the buyers will just lose control and the price action for everything will just crash, but we're not there yet. And until we are there, we have that potential to move upwards, and this exhaustion we have seen developing, which is making everyone turn excessively bearish a little bit too soon, I think, is not weakness yet. It is just exhaustion, and it can still be absorbed. The moment it turns to weakness, then we will see those corrections on the higher time frame. But while that total sustains, while we see that total market cap remain above this gray box, this, in the simplest way of explanation, is that it's saying that cryptocurrency has the potential to continue upwards one more time, or two more times, whatever it's going to be, just a figure of speech, okay? But if we drop below here, we run the risk of steeper corrections. The same goes for altcoins. Altcoins are a shit show. Not going to, sugarcoat it. They're not looking great. But altcoins are situational. That is just the cycle we are in. We are in a cycle of rotation. We are not in a cycle of holding altcoins 10x, 20x, 100x. We're in a cycle of rotating from one terribly horrible scam coin to the next celebrity shill coin and back and forth. That's just how it is. So money is just rotating in and out of altcoins, and that just results in most altcoins suffering horrible pullbacks between pretty explosive rallies, but never really sustaining their highs or prices. So altcoins, I'll say it one more time, I have potential, I have hope for altcoins provided this level sustains, right? This horizontal level right over here, provided this level right here sustains, we have hope for altcoins. Now, if we look back at Bitcoin, go to a daily, actually go to a weekly chart, okay, we can see that level corresponds to this level here. we saw a correction into that level, we had the potential to continue higher. The same structure, the same pattern, therefore the same potential expectations. Thanks for tuning in. Catch you in the next video. Have a fantastic day. Bye.